this year, it's time for a special tax crypto class. Take it away, Beeks.
Yeah, absolutely. So let's talk about next year, because this year it's already over. You're going to have to pay your taxes. But let's talk about next year. What happened this year had this big ramp in December. People had a lot of profits. They took those profits. Now we're down for the first quarter. And all of a sudden you're saying, where am I going to get that money from? Well, let's take a look at what you should do going forward. We know this is a volatile asset class. We know that there's going to be some taxes to pay. Number one, as you're trading this year, take 30%, do it maybe once a month, once a quarter. Take 30% of those profits and put it aside in a savings account. You know that that's going to be roughly where your taxes are. Could be a little higher, could be a little lower, but at least you have some side cash on there. Again, very volatile asset class. Number two, to realize crypto-to-crypto trades are taxable. So that means if you take Bitcoin and you buy Ethereum with your Bitcoin, that's a taxable event. A lot of people thought that perhaps only when you take US dollars and buy crypto, then you can buy Bitcoin and Ethereum. That isn't taxable. It actually is a taxable event. At least that's the guidance that I've been giving. So that's very conservative. Better to be that way. And then finally, something that Seema actually mentioned, monitor your short and long-term capital gains. Remember, the tax rates are going to be different. So if you hold something for over a year, you're going to have a lower tax rate than if you're trading it. So as you're buying and selling this year and as you're trading, take that into account when you're thinking about selling something. Do I want to hold this for the next year? Is this a place to sell it? And what is my tax liability going to be? What's the difference going to be? So those three things, as you're trading crypto this year, should keep you going.
BK.
Yes.
Let me ask you a question.
Very interesting, guys. The one thing that bothers me is the crypto-to-crypto trades. That's pretty ridiculous because, you know, I own real estate and we have something called a 1031 exchange, which makes real estate investing awesome because when I own my property, for example, if it has like a $400,000 gain, I'm not paying any taxes on that $400,000 gain. And if I decide to buy another building that is worth more, I can transfer it into the next building, that $400,000 gain, and pay zero tax. And that's why real estate is so beneficial. It's a great asset class to invest in. And when we have a president like Donald Trump, he's done a great job of making sure that everything other than the mortgage deduction, which if you own, you know, rental properties, it doesn't even really matter. But yeah, Trump has done some really nice stuff for real estate, or he's kept it that way. And so my issue or idea I want to bring up to the audience, which you might have seen in a previous video, is they can't track your crypto-to-crypto trades if you use an offshore brokerage. So for example, I use Bittrex and I am reporting all my taxes for my crypto trades on Bittrex because Bittrex is founded, or it's in the US, and I know for a fact they're going to report everything to the IRS. So I am not cheating on that. I am reporting everything. Now, I also have a Binance and a KuCoin, right? They are not going to give anything to the US government. So I personally will still report all my taxable gains, but just wanted to bring that up to you guys, that if you decide to open up a Binance account, a KuCoin account, there's links on this channel if you want to look into that. I don't see how the government will know. And then the other question I want to bring up to everyone when it comes to taxes, and I don't really know, so hopefully maybe we get some comments out here, is let's say I send $2,000 of Bitcoin to my wallet on KuCoin or Binance. And then let's say now I send back 3,000 or 4,000 or whatever back to my Gemini account. How is that going to be taxed, or how does the government kind of figure that out? They don't have the transaction history for those offshore accounts. So I don't know exactly what is going to happen there. I'll probably just ask my CPA, my tax guy, just do what my CPA says. But just a question to bring up. And another thing they haven't mentioned, which is a very possible thing, is hacking. I mean, if your account is hacked, if you send your crypto to the wrong address, is that a taxable loss? I'm sure there's plenty of people there that have lost. I mean, I lost Ethereum once on a, I just messed up. I sent it to the wrong wallet. and I am unable to get that. And it was actually a good amount. It was like 500 bucks of Ethereum. So I'm talking to my tax guy. I'm writing that off. If I made money and the government wants tax, well, they're my business partner, right? They have to also take the losses. So these are just some questions. I'm not an expert. I am going to hire a great CPA who already has dealt with crypto assets for a long time. In fact, he's worked with some big whales that bought Bitcoin when it was like $1. So I'm going to assume he knows what he's doing. He's worked with some very successful clients. I am going to take his advice. I'll share his advice when it gets passed. I'm filing after the 15th, but when I do my tax filing, I'll share whatever information he talks about. But let me know what you guys think. This is all very interesting information, and let's have some comments on this, what you guys think. But thank you very much for watching, and I will talk to you guys soon.